Welcome to Earnings Digest Daily, Ondas Holdings.
Quarter 3 2025 Earnings Deep Dive.
Hi everyone, and welcome back to Earnings Digest Daily. I'm Alex.
And I'm Jamie. Today we're spotlighting Ondas Holdings, NASDAQ ONDS. This Massachusetts-based company is at the intersection of autonomous drones and private wireless networks, a high-growth space that's capturing investor attention. Ondas just reported their third quarter 2025 earnings, and the numbers were eye-popping. But as always, the story goes deeper than a headline revenue figure. So settle in. We're going to unpack the results, explore the business model, and share our candid take on where this company might be headed. Company background and market context. For viewers who aren't familiar with Ondas, let's start with a brief overview. The company operates two main divisions. The first, Ondas Autonomous Systems, OAS, builds autonomous aerial and ground robots. Their drones, branded as the Optimus and Iron Drone platforms, are designed for high-stakes applications like defense, critical infrastructure, and public safety. The second division is Ondas Networks, which develops private wireless solutions that can communicate with these unmanned systems over secure, high-bandwidth connections.
What differentiates Ondas from a hobby drone maker is their focus on enterprise-grade systems. Think long-range endurance, AI-powered autonomy, and integration with existing security networks. In 2024, they were mostly a development stage company, but management set an ambitious revenue target of $25 million for 2025 on the back of growing demand from military and industrial clients. To support that target, they've been snapping up complementary businesses: surveillance software firm Centrix, motion control specialist Apero Motion, and a handful of defense-oriented startups. Investors have responded enthusiastically. ONDS shares have been among the more volatile names on the NASDAQ this year.
And let's not forget the broader market context. Governments around the world are investing heavily in unmanned aerial systems, UAS, for both defense and disaster response, and private sector customers, from oil and gas to railroads, are exploring drones for inspection and surveillance. Analysts estimate the global commercial drone market could exceed $50 billion by the end of the decade. Ondas is positioning itself to capture a slice of that growth.
Now, to the numbers. For Q3 2025, Ondas reported revenue of $10.1 million, a 582% increase over the same quarter last year, and about 60% sequential growth.
That's more than six-fold year-over-year growth and far above the company's total revenue for all of fiscal 2024. It also blew past consensus estimates of about $7.2 million by roughly 41%. Gross profit was $2.6 million, translating to a 26% gross margin, a dramatic improvement from 3% in the third quarter 2024.
This tells us the company isn't just growing revenue, but also capturing better unit economics as it scales production and integrates its acquisitions.
However, expenses jumped too. Operating expenses were $18.1 million, up significantly due to non-cash stock compensation and increased payroll costs.
After those expenses, Ondas recorded a net loss of $7.5 million. The silver lining is that this was narrower than the $9.5 million loss reported a year ago.
So while the top-line growth is impressive, the company is still burning cash. That's typical for an early-stage technology business, especially one scaling manufacturing and investing in R&D, but it's something investors need to watch.
Business segments and operational highlights. Let's break down the segments. OAS accounted for the lion's share of revenue, about $10 million this quarter. That's an eightfold increase compared to Q3 2024. OAS focuses on delivering integrated drone hardware and software. Customers include militaries, homeland security agencies, and, increasingly, critical infrastructure operators.
The company also announced that the OAS backlog stood at $22.2 million at quarter. Backlog is the value of signed contracts that haven't been recognized as revenue yet. This metric is important because it provides visibility into near-term revenue. When you include announced acquisitions and other commitments, management said consolidated backlog was above $23.3 million and could exceed $40 million when pending orders are included.
Ondas also hinted that about 90% of quarterly revenue came from a single Israeli defense customer. This shows just how critical that contract was to the quarter's success. The OAS team completed multiple counter-UAS pilot programs in Europe and Asia and secured significant orders from major defense customers. That backlog suggests these pilots may convert into larger procurement deals.
On the private wireless side, Ondas Networks continued to invest but hasn't yet generated material revenue. The promise here is that a secure, high-bandwidth network will be necessary to manage fleets of drones in real time. If their network technology gains traction, it could be a valuable add-on to the OAS platform.
Cash position and strategic moves. One reason Ondas can sustain aggressive R&D spending is its strong balance sheet. The company ended Q3 with a pro forma cash balance of $432.8 million and total assets of $550.2 million versus liabilities of just $39.8 million. How did they amass such a large war chest? Through capital raises. Management raised approximately $855 million in 2025 via equity offerings and warrant.
Of course, raising money through equity sales dilutes existing shareholders, but in a capital-intensive industry, access to funding can be a competitive advantage. With hundreds of millions in cash, Ondas has the ability to invest in manufacturing, product development, and strategic acquisitions without relying on debt.
We should mention the company's acquisitive streak. Earlier this year, Ondas acquired Centrix, which develops counter-drone detection and mitigation technology. They also purchased Aparo Motion, a motion control specialist, 4M Defense, and Rift Dynamics. Each deal aims to strengthen their portfolio. Centrix expands their security offering. Aparo adds robotic motion expertise, and 4M and Rift bring defense industry relationships. The challenge will be integrating these disparate businesses into a cohesive platform.
Guidance and forward outlook. Probably the most bullish takeaway from the earnings call was the guidance. Ondas raised its full-year 2025 revenue target to at least $36 million, up from the previous target of $25. That implies Q4 revenue could be in the $10 million range if they're to reach the new goal.
They also set a preliminary 2026 revenue goal of $110 million. To put that in perspective, the entire trailing 12-month revenue is about $17 million. So hitting $110 million would mean another 5- to 6-fold increase in 2 years. Management thinks they can achieve this because their pipeline of defense and public safety contracts is expanding, and they expect their acquisitions to start contributing significantly.
The raised guidance reflects confidence that the OAS division's backlog will convert to revenue and that new customers will diversify the revenue base. It also suggests that management believes they can deliver on integration synergies from the acquisitions. However, we should caution that guidance is a goal, not a guarantee. Achieving $110 million in revenue by 2026 will require flawless execution, continued demand, and perhaps additional capital raises.
Risks, challenges, and personal take.
Let's talk risk. The most obvious risk is customer concentration. With roughly 90% of revenue coming from a single defense customer, any change in that relationship, due to budget delays, geopolitical shifts, or contract disputes, would materially impact results.
Another challenge is integrating multiple acquisitions. Merging different corporate cultures, product roadmaps, and sales teams can lead to distractions and unexpected costs. There's also the risk that the acquired technologies don't deliver the expected synergies. And then there's the path to profitability. Even with explosive top-line growth, Ondas remains unprofitable. Operating expenses have outpaced revenue every quarter, Partly because of stock-based compensation, investors should watch whether management can control costs as scale improves.
On a more personal note, I find Ondas's growth story intriguing. The drone and autonomous systems market is one of the most exciting frontiers in tech. If management can convert their backlog into diversified, recurring revenue and successfully integrate acquisitions, the upside could be substantial. But given the risks, this is not a set-and-forget investment. It's a speculative, high-volatility play that demands close monitoring.
I agree. There's a lot to like here. Record revenue growth, improving margins, and a huge cash pile. But until we see evidence of sustainable profitability and customer diversification, caution is warranted. We'll be watching Q4 results and early 2026 performance closely.
That wraps up our deep dive into Ondas Holdings Q3 2025 earnings. We hope you found this analysis helpful. If you enjoy thorough, balanced earnings breakdowns like this, please give us a thumbs up and subscribe to Earnings Digest Daily. Drop a comment below telling us which company you'd like us to cover next, or what you think about Ondas's prospects. Thanks for watching, and we'll see you in the next video.